Welcome in this video. Where's the direction of the ZBCN coin price? We will analyze it. Don't forget to subscribe, and please watch to the end to understand. When we closely examine the chart, we can see the formation of a classic head and shoulders pattern, which is well known in technical analysis and closely monitored by investors. This pattern, unlike its inverse which signals a bullish scenario, typically indicates a bearish reversal and can signal a transition from an uptrend to a downtrend in the market. However, there is one critical point to keep in mind. The pattern has not yet been completed, and whether or not the neckline, a key level, is broken to the downside will determine the validity of the formation. Currently, the price action remains above the neckline. This means that although the pattern is in the formation phase, it has not yet been activated and has not produced a confirmed bearish signal. This is a relatively positive development for investors, as technical patterns only gain validity when specific conditions are met. In this particular case, if the price fails to break below the neckline, the pattern may be invalidated, paving the way for a bullish scenario to unfold. Patterns like the head and shoulders also reflect market participants' psychology. The shoulder areas generally represent peaks formed by weaker buyers, while the head marks a stronger but temporary rally. The right shoulder indicates a loss of strength in the market. However, the most critical aspect is the neckline, either horizontal or slightly sloped, acting as a support level. If the price reverses upward without breaking this line, it can renew investor optimism and lead to positive expectations. A failed pattern often precedes a strong and rapid upward movement in the market. Current price behavior suggests that buyers are still active and unwilling to let the price fall below the neckline. This indicates a prevailing positive sentiment in the market and continued buying pressure. If this trend continues and the price finds strong support, even if it touches the neckline, the head and shoulders pattern is likely to become invalid. Such invalidation would technically strengthen the possibility of an upward movement. At times like this, it is important for investors to stay cautious and closely monitor the development of the pattern. Many investors base their positions on these classic formations. However, the pattern must clearly meet the conditions required for it to be considered valid. In a scenario where the neckline is not broken, a strong recovery move may be observed in the market. This could lead to the continuation and even acceleration of the current uptrend. Additionally, when considering common pattern traps often encountered in technical analysis, the failure of the head and shoulders pattern to break down and a sharp upward response from this level could trigger stop losses for traders in short positions. This would bring additional volume into the market and further strengthen the upward move. Such scenarios have occurred many times in the past, and upward reversals without a breakdown often precede rallies that follow failed formations. Moreover, the price repeatedly finding support at this critical level demonstrates the resilience of buyer strength in this area. This boosts overall market confidence and increases the motivation for investors to maintain or add to their long positions. So, while the pattern structure is traditionally associated with bearish outcomes, the current picture reflects a positive sentiment and suggests that upward movements are still highly probable. However, we cannot base our analysis solely on the pattern. Let's also take a look at other metrics. Stay tuned. When we carefully observe the chart, we notice the presence of a clearly defined descending curve structure that has formed in parallel with past price movements. This curve stands out as a significant technical barrier, acting as a dynamic resistance that is not visibly obvious but whose effects are strongly felt. An invisible force that the price has repeatedly touched and been rejected from. Each touch has created downward pressure, leading to short-term corrections or pullbacks. This curve may have marked the starting point of past downward moves. However, it is important to note that in technical analysis, no level is unbreakable forever. On the contrary, every resistance carries the potential to be broken, and once it is, the market can change direction with strong momentum. The fact that the price faces selling pressure every time it touches this curve indicates that this level is being closely monitored by market participants, and that a strong supply zone has formed there. However, if the price approaches the curve again, and this time manages to break above it, instead of getting rejected as before, that moment would represent a significant shift in market dynamics. Such structures are referred to in technical analysis as breaking the descending trend, or overcoming curved resistance, and they are generally interpreted as strong signals of a potential uptrend. In this context, a move above the curve could signal not just a short-term rise, but also the beginning of a trend reversal. It's important to remember that the curves we draw in technical analysis are visual representations of market psychology. These technical structures, which reflect investors' buying and selling behaviors, fears, and hopes, become more impactful the more they are tested and fail to break. Because once they are broken, the effect is that much stronger. Therefore, the fact that the price is once again approaching this descending curve is quite exciting and can be considered a potentially positive development. If the price does not pull back after touching the curve and instead breaks above it with strong buying pressure, this would represent not only a technical breakout, but also a return of investor confidence in psychological terms. Such a breakout of an important technical barrier usually occurs with high volume and conviction. This indicates that the buyers have taken control and that the seller's strength is weakening. Additionally, these curves are often drawn by connecting previous major highs, which are also strong selling zones. Therefore, a close above the curve is not just a technical success, but also a psychological victory. This victory could encourage previously cautious investors to take long positions, leading to the opening of new trades. Moreover, these types of curve breakouts tend to increase market momentum and make upward price movements more aggressive. This offers valuable opportunities for both traders and long-term investors, as the price has now surpassed a level it previously couldn't and has begun to form a new structure. This structure could lead to new support-resistance zones, new ascending trend lines, and new peak targets. In short, a breakout above this curve may not just be a technical breakout, but the beginning of a brand new bullish narrative. In conclusion, this technical structure that has formed along the descending curve marks a level that previously pressured the price, but may trigger an upward movement in the future. If the price manages to surpass this curve and hold above it, this could be not only a short-term rise, but also the beginning of a strong trend reversal. Such a scenario would present an extremely positive outlook in terms of technical analysis, and could open the door to new opportunities for investors. A careful look at the vortex indicator, one of the key technical analysis tools used on the chart, shows that it is currently on the verge of a very promising development. The blue line is now starting to turn upwards after being in the lower zones for a long time. This may indicate a positive shift in market psychology and a potential buildup of bullish momentum. Usually, when an upward move comes after such lows, a positive atmosphere builds in the market, which puts upward pressure on the price. The meaning of this technical signal is quite deep. When the blue line starts to move upwards, it signals that buying power is increasing in the market and sellers are slowly losing control. This could be very important for traders to start taking positive positions again. In particular, this kind of upward movement is considered one of the signals for the start of an uptrend in technical analysis. They are considered as the first signs that buyers are gaining strength and indicate that a period of strategic buying decisions may begin for investors. Vortex shows us the trends. Yes, friends? I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.